Welcome back. Our good friends from Hill & Hill Financial and Morgan Hill specifically are joining us to help us make some sense out of our dollars, so to speak. Good morning.
Hey, Jess, good morning. Good to see you.
Good. Always good to have you.
Absolutely.
So we're wrapping up on the end of the year.
You
We're
bet.
starting to think, taxes, maybe moving some money around in relation to that. What do we need to know?
Yeah, and I thought since we're around the Halloween time, something spooky and scary, so let's talk about taxes.
Yes, exactly.
Usually in the area of taxes, you have two kind of areas. One is about tax preparation, and one is about tax planning. So I wanted to give a couple of points today, kind of on one side and then the
Absolutely.
other. First is about tax preparation. We're coming up to the end of the year, and a lot of folks are thinking about, oh, what should I do, any last-minute decisions. And there's something that happened this year with the recent tax code changes about making what's called a qualified charitable distribution. What folks can do is if you're over 70 and a half and you have to take these pesky things called required minimum distributions, it's kind of a forced distribution once you get to a certain age. Well, the rules now say that you can take what you would have had to take from your distribution and you can give it straight to charity.
Oh.
Which is really nice. So you
that's
can
really nice.
not only do good, but you can also possibly you could reduce your tax bill. Now,
Right.
couple of quick points. You have a limit of up to $100,000. You can't give away any more. You can do partials, and you can't, once you give it to charity, you can't take that as an additional deduction. But there are a lot of folks going, boy, I may not need that distribution as part of my income. I love this charitable organization, maybe a church or a synagogue or a civic organization, and you want to just give it straight to them.
Do we need to be conscious of the type of charity we're giving to as far as how they're classified for it to fall into this category?
Yeah, Jess, based on my reading and understanding, and just so we know, I have education in the area of tax. I am not a tax professional such as a CPA or an enrolled agent with the IRS. So you want to always consult your tax professional, but it would be 501c3s,
Right.
things that are legitimately a tax. It's
That's
something that you
we
could
need to
be
make
deducted
sure that
for.
it isn't going to be a tax deductible donation
Absolutely.
under normal circumstances.
Yeah, so as you're doing some end of the year planning, you may want to think about what's called a qualified charitable distribution. And then the other side is this thing called Publication 590. A lot of folks
That was on my notes for today that
Yeah.
you gave me, and I said, what is this?
Yeah, well, at last reading, there are thousands of pages in the Internal Revenue Code. Publication 590, folks, is a section of about a couple of hundred pages that governs your IRAs, your 401ks, the 403bs, that alphabet soup of letters and numbers that governs how all that works. Most people that we interact with, first of all, have no idea that this document even exists. And the reason that I'm highlighting it is you can basically have rules that change based on whether you're a spouse or a non-spouse.
Okay.
So let me just real quickly unpack that. When you have like your 401k, you list who gets it after you pass away, your primary or perhaps your backup beneficiary. The IRS rules in 590 are very specific about a husband and a wife or spouse to spouse, that there are all sorts of privileges that they have. The key, folks, is in this little document, the rules change if you're not a spouse.
Oh.
And not only the rules change, but the possible penalties and tax implications are really huge. So we often advocate to folks, know what this looks like,
Absolutely.
be familiar with it, and make sure that you've made the proper planning steps so that those you love get your stuff.
You might think that you're taking care of them, but now maybe not the case as much.
And the great news is it's very easy to know how this works, but a lot of folks that we interact with, whether I'm doing public events, I'm teaching at UTC or any number of things, they go, we've never heard of this before. So we always like to highlight that, how it works, to make sure that you've got a plan that those you love will inherit your things, not just spouse to spouse, but also those non-spouses to make sure that they're first in your life. So those are just a couple of planning tips and
Absolutely.
preparation tips as we come up to the end of 2018.
So if someone's watching and they have these questions in their mind and they are in that brain thought process that you've talked about, can they give you a call and you can help us out?
You bet. We've got folks at our offices in Chattanooga. We've got offices in North Georgia. The phone number to call is 1-800-887-9647. 1-800-887-9647. And certainly you can call, be happy to take your phone call, answer any questions. And also today, based on the first 10 callers who call in, happy to give you a complimentary copy of my most recent book, Building a Better Retirement. And one of the sections we talk about there is 590 as we talk about that. So feel free to call in. We've got folks at the offices standing by, more than happy to send you a complimentary copy of the book.
I wanted to remind our viewers about the book, so perfect. Give us
bet.
that phone number one more time.
You bet. It's 1-800-887-9647. 647.
All right, perfect. Morgan, thanks so much for joining us.
Always a pleasure, Jess.
Thanks
you.
for answering all these questions that I had too. I was like, what is this publication?
You
So
bet.
perfect.
It's a pleasure. Thanks
All
for
right.
having me.
We'll see you again real soon.
You bet.
And we'll be
Thanks.
right back on Let's Chat.